All right, people, we're going to go ahead and get started. Tonight's training is going to be pretty brief, but nonetheless super important. We're going to be breaking down some market structure, right, on today's call. We got a few additional calls this week, which is going to be pretty good. I'm excited for that. Hopefully you guys are as well. We're going to go ahead and get started here, though. We got 18 people in here. What's going on? Go ahead and drop a 2 if y'all are having a good start to your week so far. Hopefully you guys are doing awesome. Go drop a 2. Drop a 2. Let's see it. Excellent. All right, cool. So we're going to go ahead and get started. Josh is always throwing me off with these different numbers, man. Always. That's why I love him, though. He's a beauty. All right, cool. we're gonna jump right into things. For those of you guys that are seeing my screen right now, you guys can see my screen, right? Y'all can see this right now. Hopefully. Perfect. Excellent. Okay, cool. So on screen, right, you got my beautiful diagram going on here. And basically everything you're seeing here is essentially market structure. And if you guys have a notebook and a pen, by your side, if you don't, I would suggest going ahead and grabbing one. But if you do, go ahead and, you don't have to draw it this sophisticated, but just go ahead and draw something like this. Draw something like this, right? On that piece of paper, what have you. Something like this, okay? Because on today's call, we're basically going to be going over market structure, all right? And this is something that is extremely important to understand. A lot of you guys in this call might already understand and know what market structure is, but this is going to be a good recap call nonetheless for you guys that already know this concept, or not even concept, but just understanding of how these markets move, right? And as simple as it may seem, right, we just got a few little squiggly lines on here. This is something that's going to take you to that next level as a trader, right? And I like to say that for a lot of the concepts that we like to go ahead and teach and preach on these calls. But market structure by far, alongside risk management, I would say they're tied for first place when it comes to profitability in the markets. I feel like one of the things that you guys might be able to relate to, and the reason I say this is because this is how it was for me for a really long time, is we get lost in the time frames. When we're looking at charts, right now we're on the daily time frame, but this is just my drawing. But if we were to think about trading, a lot of times I'll have people come up to me, and it was the same way for me as well for a really long time, and they'll ask me, what time frames do you use for your analysis? Or, what kind of time frames do you suggest I stick with, so on and so forth. And when it comes to trading with these institutional concepts, not even with the institutional concepts, but for me in general, I really like to think and keep in mind, that longer time frame bias, okay? The bigger time frames are going to have a more significant impact than the smaller time frames. And sometimes we get, for example, if we're so zoomed in on this one part of my drawing here, we can't really see anything from this, okay? And this is a good depiction of what will happen sometimes if we get lost in these smaller time frames. Sometimes we'll be zoomed in so far that we can't even really see the bigger picture. And then that's when we need to go ahead and, obviously zoom out to really get that longer term and bigger, time frame picture of where price is headed and what it's doing, okay? But market structure as a whole is basically just, this understanding and ability to look at the chart and understand whether we are in an uptrend, whether we are in consolidation, whether we are in a downtrend. And ideally, what we want to do as traders is trade with the trend, right? I'm sure you guys have heard this saying before, the trend is your friend, okay? And this is very much the case, okay? It doesn't matter what concepts you're trading. Ideally, if you're wanting to put yourself in a position to be more profitable, you want to be trading with the trend. Now, the thing is, which, time frame do you stick with to really get a good picture of the trends? Because sometimes what we'll see happening is, maybe this is, we'll pretend that this is daily time frame drawing here, right? The 4 hour would also be, making some sort of pattern like this, right, in an uptrend, and then it would flip and go bearish, that kind of thing. But if we're focusing in on these, let's say that these bigger lines are the daily time frame, right? Daily time frame, daily candles that are being printed. And what if we were to be zoomed in, right? What if we were to zoom in and just focus on this little retracement that we see on the daily time frame, right? We might be seeing this. I'm not sure how well this is going to look or how good this is going to look, but we might be seeing something like this on the 4-hour time frame. And because we're so far zoomed in, we might be thinking, oh yeah, this is definitely a downtrend, right? This is going to continue going down. Okay, and while on the 4-hour time frame, we might in fact be in a downtrend where we're making these lower lows and lower highs, right? Lower low, lower high, lower low, lower high. You know, on the 4-hour time frame, we might be in this downtrend, but in reality, all this is a correction on the daily time frame, right? We were so zoomed in, we were only focusing on, you know, this part of the trend, when in reality, you know, this is the full picture that is being created. Okay. And the reason I like to bring this up is I had a really hard time trying to find the time frames to really focus on when I'm trading, right? This was until, you know, in May, that wasn't when I started to have a lot of breakthroughs as a trader, May of this year. And the first of which was smart money concepts and the way that the institutions trade. And then it came down to understanding market structure better, right? Looking for these institutional candles while also taking into consideration, you know, how we're able to look and basically, you know, classify what the trend is actually doing, whether it's an uptrend, downtrend, or retracement, that kind of thing. And we're going to be going over some terms today, as well as kind of just breaking down everything you see here. It's not the best drawing in the world, but nonetheless, we're going to be breaking this down so that it makes a little bit more sense to you guys. Right, so first thing I want you guys to do is go ahead and write down, you know, this word right here. Counter trend. Okay, these couple words. I don't know if this is one word or not. Yeah, it's probably like a hyphen. Yeah, perfect. Counter trend. Go ahead and write down this word counter trend. Okay, because a counter trend is when we might be seeing something like I was just talking about, right? Where we're in this daily time frame and it's going to the upside, but we can see on the 4-hour time frame that this is looking to be a downtrend. Okay. Basically, we classify this as a counter trend. Okay, and a counter trend is basically, you know, you could consider this to be a retracement, right? If we're zoomed in on the 4-hour time frame and we're bearish, but on the daily we're bullish, right? Right now we would be seeing a daily counter trend, also known as a retracement. Okay, we'll talk about break of structure in a second here as well. So go ahead and write that down. BOS, also known as break of structure. Okay, this is super key when we're trading. You know, again, ideally we want to be trading with the trend, and when we see something called a break of structure, right, our bias is going to shift from an uptrend to a downtrend, or vice versa, right, from a downtrend to an uptrend. When we see a break of structure, that's when we want to switch, or, you know, flip our bias from buying to selling or selling to buying, you know, depending on what kind of market structure is being formed. Okay, so if we go down here, we'll go ahead and we'll take a look at this. I might redraw it a little bit less complex. This one I just got kind of excited when I got home for this call, so I just popped off and did a bunch of lines. But, you know, if we were to focus on the left-hand side here, all right, one thing that we can see happening, and this is something we talked about in previous sessions as well, but I just want to really break this down for you guys, especially since we have some additional webinar times this week. It just makes sense to go into it in a little bit more detail because it is such a crucial understanding, being able to identify market structure, right? So, you know, daily time frame. So we'll pretend that all of this is happening on the daily chart, okay? Here we are making these higher highs and higher lows, and we are therefore in an upwards trending market, okay? And what happens here when we get to the top, right? This is our last higher high before we break structure, come down and create what we call a lower low, okay? The reason this is considered to be a break of structure is because on the daily time frame, we have now broken down, and instead of creating another higher low, we've actually made a lower low, right? We can see in relation to that higher low that happened previously, this one actually went below this point in the market, and therefore it is a lower low, okay? This is a good indication that we've seen something called a break of structure. And instead of us, you know, ideally, when we're in an upwards trending market, someone go ahead and answer this in the question in the chat. Would we be looking for buys or sells in an upward trending market? Someone let me know in the chat. Buys or sells when the market is trending to the upside? Would it make sense to be looking for buys or sells? Someone help me out. Buys. Excellent. Perfect, right? Ideally, we would want to be looking for buys, okay? As we're creating these higher highs and higher lows, we would want to be looking to buy at these higher lows. But how we trade, we selling to buy. This is facts. This is true. We can't get too saucy for this session, all right? We're just going to focus on market structure. Ideally, if we wanted to be safest and if we were really trying to maximize our profits, we should be looking to buy in an uptrend. And typically it would be from, these higher lows. Okay? Every time we make this higher low, we'll get into the Fibonacci and Wyckoff in another session later on this week. I have it all kind of set up so it's all going to kind of flow in with one another as we go throughout this week. But again, we're looking to buy from these higher lows so that we can then ride it up on that next expansion. Write that word down, expansion. Expansion is basically when you have made this higher low and you are ready to expand beyond this higher high that we had previously to create a new higher high, right? This is what we call an expansion. And ideally, we want to be riding this, this wave up, this expansion to create that new higher high. That's what's going to be allowing us to maximize our profits, okay? But when we've created this lower low, right, maybe we were entering a buy, maybe we were anticipating the price to come down to here and then continue going up, but it broke down, so we were maybe stopped out of that buy position, okay? Now we should be flipping our bias from buying to selling. Because what happens when we have a break of structure, I'm going to go ahead and draw this out here, right? We can see that this was our previous, low, this higher low that we had. I'm going to go ahead and turn this into the color red, okay? This is our break of structure because now we've broken down below that previous low and created a new lower low. And as price comes back up, we then create this lower high before then coming down, expanding into our next lower low, so on and so forth, okay? Our bias, whenever we see a break of structure, should be flipping to the other side. So if we were buying here, ideally we want to then be flipping our bias once we break the structure and look for sells as we're creating these lower highs. Okay, does that make sense? Let me know in the chat if you guys have any questions. This is something I'm going to get into some more detail with. All right. I'm not going to talk about the fib today. I'm not going to talk about Wyckoff. I want to just focus solely on, simple market structure, higher highs, higher lows, and then when we break structure, flipping to that lower low, lower high sort of scenarios. Okay. So, again, ideally, when we break this low, when we've broken that structure, we want to be waiting for that lower high so that we can then enter our sell, ride it down for that next expansion as we expand beyond that previous lower low and create a new lower low, right? Now, we had someone in the chat who was talking about how we could sell to then buy down here. This is the case, we are able to trade against the trend and do that. But if we wanted to be safest and if we were really trying to secure the bag, so to speak, and put ourselves in a position to maximize profits. Again, we want to be trading with that longer term trend. Okay. Needless to say, obviously you could be looking for sells at these higher highs to then ride it down to these lower lows for buys. You could totally do that. But a lot of the times, I want to be, not to say that I don't do this because I do. I literally sent out a trade idea yesterday that was saying buy to sell, right? But ideally, you want to be focusing more on the positions that are going to be going with the bigger picture, with that longer term trend. Okay? You can obviously trade these retracements, right? But you're not going to be able to make as much profit as if you were to trade these expansions, right? So, here we got our break of structure initially, right? We continue on this downwards trending market, creating these lower highs and lower lows. And then what happens right here? Someone go ahead and tell me in the chat what we see happen right here. We now have a blank. What's happened? BOS, break of structure. Excellent. Okay. We now see this break of structure right here. And now we are creating a new higher high in comparison to our previous lower low. So if we were selling from these lower highs, what should our bias be flipping to now? Someone go ahead and tell me in the chat. If we were selling before and we've now seen a break of structure, what should we be looking to do? Buy. Perfect. We're looking to be entering our buys, right? We're buying. Exactly. Right. So now again, we're looking to then stack buy orders with these higher lows, and then we, would go on and so forth. Basically rinse and repeat what we were looking at over here. Okay. I'm going to go ahead and delete this, and it's all fun and games me being able to draw this with with the tools that we have using TradingView. But why don't we go ahead and take a look at this in with real price action with the candlesticks, okay? Now, for those of you guys that don't use the line chart, go ahead and write this down. Tell yourself, or you can do it right now if you're at a computer. Favorite the line chart right here. Okay, so I have the candles favorited, and I also like to use the line chart because when it comes to gauging, the market structure, you're gonna want to be using the line chart, okay? And the reason I say this is because the line chart doesn't take into consideration any wicks. Every wick tells a story, and we love wicks, but when it comes to market structure and really gauging the trend of the market, whether we've seen a break of structure or not, we want to see price action without those wicks, period. All right. And I suggest, I would strongly recommend you guys, after we get off this call, go ahead and just back test this, right? And what I mean by back test is basically just go to any currency pair, go back in time, and see if you're able to go through the motions identifying these different trends in the market. USD CAD, for those of you guys that know me well, this is my favorite currency pair to break down literally everything I do as a trader, whether it's market structure, smart money concepts, Fibonacci, Wyckoff, all of it. USD CAD is my favorite example, my favorite currency pair to look at and break this kind of thing down for you guys, or anyone for that matter, right? And if we look back here, if we look back, right, this was a strong uptrend, right? We're creating these higher highs and higher lows, right? We come down. This is still a higher high, a higher low. But then we come up and we create this, if I can grab my pencil, this lower high here. And then market comes down, we've created that new lower low, right? I like to always focus in on this price action right here, okay? I like to look at this on the daily time frame. Here again, we were seeing these lower lows, lower highs consistently, right? We come up, we then break structure right here, creating this new higher high. All right. How do you know? Okay. How do you differentiate between break of structure and beginning of a counter trend? Great question. Excellent question. I'm gonna cover that briefly in a second here. Okay. If we're looking at this, again, daily time frame, here's our break of structure right here. All right. When we've then created that new higher high, we come down, we have now created our higher low before I then a new expansion into a higher high, so on and so forth. Higher low, higher high, higher low, higher high, right? And this just continues, and we're able to see that this, continues trending to the upside before then once again, coming down, creating that higher low. Lower high, lower low. There's our next break of structure. Okay. So great question in the chat. How do we know if it's a counter trend or, a break of structure? And this is sometimes the problem for me when it comes to analyzing these currency pairs on different time frames. If we were to just focus on the daily time frame, okay, then we wouldn't really need to take a look at any other different time frames to see what the, maybe the longer term trend is on a weekly. We don't need to worry about that if we're just focusing on the daily. So a break of structure versus a counter trend, this can be something that gets a little bit confusing when you're looking at different time frames. So, for example, if we were looking at USD CAD on the weekly, right, and how we've made this lower low, there's our break of structure, lower high, lower low. Technically, what we're seeing right here is a daily counter trend on the weekly time frame. And we can see that this high, right, did not go above this one over here. So we are still bearish on the weekly time frame, okay? A break of structure on the daily time frame is one thing, right? But if we're focusing on the weekly and the daily, then what we're seeing is this is actually just a counter trend on the weekly chart. Okay? And this is allowing us to, it's that motive to come up a bit higher, give us that retracement before then continuing down, expanding for that next lower low. Right? So, the trouble that I've had in the past was being able to look at a smaller time frame. So let's say we started on the weekly here again, right? We're seeing these lower low, or this lower low, lower high, lower low, lower high. Ideally, we're looking to see this come down and make a new lower low at some point, right? But if I go to a smaller time frame to try and get a more close-up picture, what I'm going to see is that this on the daily time frame is looking like it's bullish, okay? And while this is bullish on the daily, we know that on the weekly time frame, all this really is that retracement, right? That counter trend before coming to make a new lower low. So the easiest way to differentiate a break of structure and a counter trend is taking a look at that bigger time frame. Okay? You don't want to get too lost in these smaller time frames, right? We can look for break of structures on the 4-hour chart, the daily time frame, right? The daily time frame I don't usually trade on. It's usually one of the 2 time frames that I look at for longer term trends. Initially what I'll do, and you guys can feel free to write this down, what I'll do when I'm starting to chart a currency pair, right? Don's step 1 when analyzing, let me see if I can spell this right. Analyzing, is that how you spell it? Analyzing. No, that's no, is that? I don't even know. It doesn't matter. Analyzing pairs, right? Weekly trend. Step 2, daily trend. All right, and then 3 is usually the 4-hour trends, and I will not go below that time frame to try and gauge, right, whether we're seeing break of structures or what have you. The only time again, when this is just to analyze and be able to gauge the trend of the market, I will never go below a 4-hour time frame when I'm looking to try and, see whether the market's in an uptrend or a downtrend, because then it's just going to be a lot of white noise. This isn't going to provide me with much information because, again, these bigger time frames are a lot more powerful than these smaller time frames. Something that I would personally run into a lot. Yeah, absolutely. But I see if it matches on both the smaller and bigger time frame, like the daily. Is that a good way to go about it? Absolutely, yeah. So if you have, like in my perfect kind of setup, if you will, what I would want to see is, on the weekly time frame, I'm expecting this to trend downwards, right? We've made this lower low, this lower high, right? We've come up. There was a motive to come higher for that retracement. And now, in my opinion, there is a motive for this to continue lower, to continue making these lower highs and lower lows. Okay? So, if the daily time frame is in is aligning with the weekly time frame, which if we look, it is, okay? We can see that again, this daily time frame was bullish, but all this really was a counter trend on the weekly. Okay, does that make sense? Right? As we're coming up, we break structure on the daily, right? We could technically be buying at these higher lows to then sell at the point where we've then completed that retracement on the weekly and really ride this thing to the downside longer term. Just answer my question. Yeah, no worries, you're good, right? And if we look at this, okay, the weekly time frame is bearish. We've analyzed that. We've seen that. The daily time frame was bullish, okay? And what we had, if we were to go into the replay mode here, right? If we go to the weekly time frame, we're going to see that this had just created a lower low. And what happens usually when we've created these lower lows is we'll need to see some sort of a bounce, a retracement, right, to then create that lower high before the market then continues to go down, creating that next lower low. Okay, so for me, if we're looking at this and we've broken structure on the daily, we can see it right here, right? That's our daily time frame break of structure. Okay, this to me is like validation that, okay, maybe this is the start of that retracement on the weekly time frame. There is room for this to come up, right? Hypothetically, this would be a great opportunity for me to start buying as we continue to go back up, providing us with that retracement before then looking for sells to then really ride this thing down. right? So we'll go back out of the replay mode here, and we'll take a look at this again on the daily time frame. You know, we have this break of structure that takes place here: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high. That's our instantly. That's our, you know, our bias should completely flip, and now we are looking for sells. Now this is a good indication that we have completed that retracement on the weekly time frame, right? As soon as we see that break of structure on the daily, because again, this isn't a break of structure on the weekly time frame, you guys, right? If we take a look at this, this is not a break of structure on the weekly, right? The only time we would see a break of structure on the weekly is if we came above our previous lower high, right? Here we created yet again another lower high, and therefore this is not a break of structure on the weekly, okay? But because we've seen this break of structure on the daily now, where we've created this, you know, higher low, higher low, and then this lower high, right? And then that lower low, our bias should immediately flip from buying to selling, right? The weekly and the daily are now in line to continue going to the downside, okay? And if you wanted to get really crazy with it, this is sometimes how you can get really lost in the trend, is you go to the 4 hour time frame and see if we're in a downtrend as well, which, you know, in this case we are, right? This is our lower low, or sorry, our technically higher low, but then this was our lower high. This was our break of structure, if you will, right down here on the daily. When we came below this right here, that's our break of structure, right? We've come back up. There's that retracement on the 4 hour time frame before then continuing down. You know, ideally we want to see this come down, break below our low here to create another lower low, which would be in line with the daily and would also be in line with the weekly, considering that we want to see this come down quite a ways on the bigger time frame. Been overthinking this for so long. No, it's literally like, this is something that when you have that breakthrough when it comes to market structure, this is something that really can be game changing for you as a trader. This can be like night and day, you know, from profitable to even more profitable, or, you know, maybe not profitable to profitable, right? The way that we teach and always like to preach, you know, with these risk to reward types of trade setups, again, I always am looking for a 1 to 3 minimum risk reward ratio trades, right? I'm always looking for this type of trade setup. Regardless of what time frame we're looking on, I want to see a minimum of a 1 to 3 risk reward, right? And then you combine that with market structure, understanding the bigger picture, but not getting lost in the time frames, because it's so easy to get lost, right? You know, you really want to try and focus on the bigger time frames for the trend, right? And then more or less you look for these institutional candles on the smaller time frame to really get those sniper entries to follow with the trend, right? Does that make sense? Yeah, now that you see, you can't unsee it, exactly, right? It's something that, you know, and again, I encourage you guys to go ahead and backtest this, right? Go ahead and backtest this. Focus on the daily and focus on the weekly. When we're talking about market structure and we're trying to identify the trend, again, my step number one, before even looking for institutional candles, is what's the trend on the weekly? What's the trend on the daily, right? Sometimes I'll be able to see that we're in a counter trend on the weekly time frame, but it's an uptrend on the daily, right? You know, and a lot of the times I will look for that 4 hour time frame to, see if the trend is lining up with the first two that we're looking at, but also using the 4 hour time frame to identify these institutional candles that we love to play off of. Okay? Anything smaller than a 4 hour time frame should not be used for market structure. All right, write that down. Anything below a 4 hour time frame should not be used to identify market structure. Okay? It's not worth the chance of getting lost in these smaller time frames when the weekly, daily, and 4 hour are giving you a good enough picture as to, you know, the direction of the market, whether we're seeing some sort of counter trend on the weekly, the daily, the 4 hour. Again, even just these three can sometimes get confusing. So save yourself the hassle and don't even bother looking at these smaller time frames when it comes to identifying market structure. Can you do it? Of course, right? Can you do it successfully and pair it with, institutional candles, smart money concepts, what have you? Absolutely. But again, you're just providing yourself with more opportunity to get lost in these smaller time frames, right? When we're on the weekly time frame, we can see this bigger picture, right? But when we're on a smaller time frame like the hourly, all we're seeing is this close up. Let me just get my pen here, right? The close up of something that in reality isn't really a big deal, right? That's what we were looking at in the hourly time frame. This is what we're looking at on the weekly. That's just a small little bump in the road, if you will. Most likely for a swing trader then, since we were basing yeah, I would definitely, swing trading in my opinion is the most, the easiest way of trading. Obviously everybody has their own preferences, but swing trading is the most profitable, at least for me. I like to swing trade the most. Obviously we will do intraday trades once in a while, but swing trading is really what I like to do the most often, because then I can enter these sniper positions, these sniper entries, right? Excuse me. We could have entered a sniper entry right up here, right? Maybe some sort of mitigation from this last up candle before the down, right? We could obviously, look at a smaller time frame to gauge where that institutional candle was, right? There probably was one. And then you're just, you could be in this sell for time. I mean, understanding that we're probably going to come down and make this lower low on the weekly, you could be in this thing for like months if you really wanted to. And a lot of the times, you guys, I'm going to talk about partials real quick, because this is something I've gotten a lot of questions about recently. What are partials? Sometimes I'll say in the chat, SLBE, right? That stands for stop loss, break even. Okay? Right? If we're taking a trade like this and our stop loss is initially down here, when we're entering this trade, we're entering a buy here. This is a buy position that we're looking at. We enter here, our stop loss is down beneath, right? Once we go, to this point in profit, what we can actually do is we can modify our stop loss to break even. So now this becomes a risk-free trade, and we are literally risking nothing to make something, right? I would much rather break even on a trade and not make anything than, lose that 1 or 2% that I was risking on that trade. You know what I mean? And then it's genuinely, you can go ahead, maybe this is where you're setting your stop loss to break even. You can also go ahead and do something called taking partials. So if your lot size is anything above a 0.01, you're able to take partials. Okay? A 0.01 you are not going to be able to take partials on, because that's the smallest lot size possible. Right? But if you're in a 0.02, what you can do on your MT4, whether you're on the computer, whether you're on your phone, either way, you're able to close a trade partially, right? If we're in an 02 and we're at this point, we're like, okay, cool, I'm going to move my stop loss to break even, and I'm also going to go ahead and secure a small bag on this trade, right? What you can actually do is you can close out just 0.01 of that position, right? Which is going to leave you with what? 0.01 left over to continue riding out, right? If it hits your take profit, cool. Right, you just made some more. If it doesn't, also cool. Maybe you come back and get stopped out at break even, but guess what? You already took profit on your one position. Right? You already secured that bag, that initial bag, before continuing to see if this does actually come up and hit your TP. Does that make sense, you guys, for taking partials? This is something that I know a lot of people, or at least for myself, I didn't know what taking partials was until probably like my second month of trading. Like I only thought you could trade the entire, I didn't realize that you could close out just a portion of your position. So technically, if you have like a 0.10, you could take partials 9 times before you completely close this trade, right? After how many pips you take partials, it all depends, man. All depends on the setup that we're looking at. It really does come down to what the charts are showing us. Some people have a rule where it's like once it goes 50 pips in profit, that's when you can take partials, move your stop loss to break even. I'm the type of person that, again, I don't get too caught up in pips. I focus a lot more on percentage. Depends also, yeah, exactly. This is something I'd like to mention a lot of the times on my sessions is that we don't forecast, we trade price action. We wait for the charts to basically go ahead and, provide us with what it is that we need to see in order to take a trade. We are price action traders. So we will base a lot of our analysis as well as when we're getting in and out of the markets based off of price action. So it really depends on what the charts are showing us and how the price is responding at certain areas in the market, right? There might be something like equal highs or equal lows that I could be looking to take partial profits at. Yeah, no worries. That's what we're here for, man. Honestly, these breakthroughs, like this is the type of thing that these calls are all about. All about. No worries at all. If you guys have any questions, if there's anything you want me to cover, this is pretty much being the session, right? Go ahead and back test this on your own time. Again, the markets are going to be your best teacher. I'm here to obviously, provide you guys with this understanding, but now it's up to you to really go ahead and apply this information, right? Go ahead and apply it. Go ahead and look back in time. You can be on the line chart. You can be on the candlestick chart. It doesn't really matter. You can see market structure on both, but it's better, in my opinion, to use that line chart. Yeah, Danito, no worries, bro. Thank you, bro. I appreciate that. Peace out. Peace out. We'll catch you guys soon. GJ. Yeah, you want me to go ahead and take a peek at GJ? GJ has been kind of slow, I'm going to be honest. I'll go ahead and take a peek at this one, absolutely. So I'm going to go ahead and delete this stuff here. Right, 4-hour time frame. We'll go to the candlestick chart. So GBP pairs, if we look on the daily time frame, we've broken structure here. Or not necessarily broken structure, but we were in a counter trend, okay? On the weekly, we can see that obviously this is pretty bearish, right? We've been making these, let's go to the line chart right here. We're making these lower lows and lower highs, right? And now we're in the midst of a counter trend. We're looking for this retracement up to maybe break structure, or, right, maybe it stops up here and then continues down to create a new lower low. One thing that's appealing to me on GJ right now is these equal lows. These equal lows, to me, that's just like a target. Again, we don't look to enter on these equal lows and equal highs, or at least I don't personally. I like to see these as targets, right? Spread does suck, absolutely. I would, again, this is one of the reasons why I only trade at the certain times of day. Spreads are really whack in between 5 p.m. and 7 p.m. Eastern Standard Time. I never take trades between that time. I used to when I was initially starting out in these markets, but not anymore. That's a hard no for me personally. Yeah, the best time to trade, especially if we're talking about spreads, is between 8 a.m. and 12 p.m. Eastern. When there's the most amount of volatility in the markets, that's going to be your best time to trade. In general, and then obviously again, because of the amount of money that's being moved around at that given point, spreads are a lot smaller, right? So here, daily time frame, again, we have this price action to the upside. We are making this correction as we speak, right? Ideally, again, we've been creating these lower lows and lower highs, right? Here's our most recent lower low. We're waiting for price to come back up, make that lower high, before then continuing to the downside. But what I want to see right now on GJ personally is, we've seen this price action right here where we've kind of, we've come up, we made this equal high, came down, we then made this higher low, higher high, right? We broke above this. I want to see price come down on the daily time frame, right? The daily time frame has room to go to the downside. Okay, and if we look at the 4-hour, we can see that the 4-hour has broken structure here, right? We were making these higher highs and higher lows, and now we've made this lower high, lower low. You can see it even better on the line chart. We're at a point right now where we're making this new lower high. And to me, again, understanding that the bigger time frames are probably going to see some more price action to the upside, but first, before that, we need to see a retracement. In this case, what we're doing is we are actually selling to buy for that next expansion to the upside on the 4-hour and the daily chart. Understanding that on the weekly, right? All this is a counter trend. All this is on the weekly is that retracement, this counter trend. Okay? Can you go over which pairs to trade at which sessions? Absolutely, for sure. For sure. I'm just going to break down GJ here and kind of give you guys my update on this before we go into any other currency pairs. Right now, this is what I was wanting to see on GJ. We have on the smaller time frame, the 1 hour and the 4 hour, we have these equal lows here. And to me, you know, again, all this is a target. I want to see these equal lows taken out. We can see that even here on the 4 hour, we've made these lower highs and lower lows. So, you know, typically we've now seen this retracement. We're waiting for that reaction to then come down for that next expansion. Okay. And my point of interest here was actually identified on the hourly chart. We have this right here, the last up candle before the down, which we can see actually did mitigate out of this one right here, right? Smart money got behind the move, buying to sell. They came back up to break even on this trade before then selling this off some more, right? And now price has been brought up to, actually we mitigated out of that one right here. And now it's time that we mitigate out of this guy, right? You know, this is what our position's kind of looking like. We had our entry area, which we were kind of just floating in for quite a while here. What we're seeing is, and I don't want to get too much into Wyckoff, but we're seeing distribution right now. For those of you guys that know what Wyckoff is, you know, we're seeing distribution taking place right here, right, where price is kind of just doing its thing. We might see that one last pop up before selling off. But again, our stop loss is right above that wick right here, okay? In my eyes, there should be no reason that we go above that point in the market because we know that, you know, we're overdue a retracement now on the 4 hour and on the daily, right? Obviously, this is a weekly counter trend. We're expecting more upside, but first we need to see that downside price action. Equal lows, 0.36. If you're looking for right here, is this what you're eyeing up, Marco? Make a bit of a bigger stop loss. Let me see what I've said in the chat for stop loss. Let's take a look here. I'm pretty sure we're good stop loss wise, but I'll take a peek. GJ. Yeah, our stop loss is good where it is. I'm not too worried about the stop loss. If you have it at 140.360, you should be fine. If we get stopped out of this trade, this will just be an invalidation, right? 140.360. This is a good place to have your stop loss. I wouldn't expect us to come up to that point, right? My first target would be these equal lows. But if we're understanding that on the bigger time frame, we're overdue some downside price action, and this is what I even said on the screenshot. Let me pull this up. I'll bring it over here for you guys. I'd be looking to hold this sell longer term. Okay, so at 139 flat, this is where I'm looking to, you know, move my stop loss to break even and take partial profits. But I actually want to see this thing held out longer term, right? Because we're understanding that on the daily and on the weekly and on the 4 hour time frame, we're ready for a retracement here before that next move up. Okay? So we are selling to buy here, essentially. We're selling to buy to sell, if that makes sense. We're selling to then buy down here, to ride it up, to then sell it for an even bigger swing to the downside. Can you go over which pairs to trade? Yeah, okay, I'll get into that right now. My bias is the same on GJ. I would expect this to happen overnight. What we might see is price come up, spike up a little bit more, and then go down. And I would expect this to fly to the downside, right? Like I would expect this thing to tank. You know, so this is something that I would be expecting kind of overnight, maybe into that London session. If we look at news, I don't believe there's any news for GBP until next week. Yeah, we're good overnight. We ain't got no news for GBP or JPY. Tomorrow, or not tomorrow, but on Wednesday, we do have some JPY news, but for the most part, again, this is my bias. I am anticipating this thing to fold over. Question, let's hear it, Marco. Let's hear it, bro. In the meantime, though, let me go ahead and I'll break down the different time frames for you guys. or not time frames, but times to trade, if you will, and what I like to trade during certain times. Um, the only two, kind of windows of trading that I like to participate in are, this window is my favorite, 8 a.m. to 12 p.m. That's a really, really good time to be trading because we have the two biggest markets, right, open and overlapping at the same time. This is when you're going to find the smallest amount of spread. Okay, if you guys want to take a screenshot of this, feel free. And then the only other time that I would be trading aside from 8 a.m. to 12 p.m. is the overlap of Sydney and Tokyo because I do need to be asleep at some point. I don't stay up for London. Right, I know some people will stay up for that 3 a.m. London market open because volatility does really start to kick in London, right? Since it's the second largest market, that does open at 3 a.m. But for example, right, I was working full time over the summer and I was not able to trade the London to New York overlap. So my favorite currency pairs to trade were, first of all, it was over this overlap. So it was probably from like 9 p.m. to 12 a.m. That was my trading window over the summer. So for those of you guys that have full-time jobs and you can't trade this session, you could look into setting buy limits or sell limits at institutional candles after you've done your analysis. But if you want to be really safe and you want to be, you want to monitor your trades, trade this overlap and look to trade NZD and AUD pairs. NZD and AUD pairs I had a lot of success with over the summer. Being able to trade between 9 p.m. and 12 a.m., right? Being able to look for these smart money setups during this overlap and then really seeing them ride out and continue to make that move in whatever desired direction the banks are going, right? This would usually happen over here. So you get your entry at this time for AUD and NZD pairs, as well as JPY pairs. And then you really watch them ride out and continue going in that direction during the London and New York overlap. Question. So UCAD, I'll go ahead. I'll go ahead and take a look at UCAD in a second here. Sometimes I tend to think London session will push GBP pairs up stronger because it's their currency. No, I usually that's like, so, again, these markets are heavily manipulated. You would think that might actually make a lot of sense, right? When it's the London session, maybe the Euro and GBP pairs would be gaining strength. It's more or less we will just see those two currencies traded in higher volumes. So there's going to be more volatility with those currency pairs. But that doesn't necessarily mean that the pound or the euro are going to be gaining strength during the London session, right? If we go back to Forex Factory, whoops, wrong browser. If we go to Forex Factory here, this is a great tool. We have a crap ton of news, by the way, guys. For those of you guys that are going to be on tomorrow's call at 1:30 p.m., we're going to be talking a little bit about Wednesday's news because Wednesday is going to be crazy for trading. Hello? All right, yeah. Wednesday's going to be crazy for trading. We got the federal funds rate, which is the interest rate in the States, is being released at 2 p.m. We have the Canadian dollar coming out with their interest rates in the morning on Wednesday. And we also have the monetary policy statement for JPY, which is tentative, which I believe has something to do with interest rates. Yeah, interest rate statement. So these are like some big red folders that we really do care about seeing, and how they're going to play out on Wednesday. And then we also have non-farm on Friday for USD. So typically when I'm looking at this and I see that we have a bunch of red folders, some of these red folders I don't care that much about. For example, this one, I don't really care too much about that. That might have had an impact on the GBP pairs, but probably not a very significant one. It is the Brexit one, nonetheless, which I'm pretty sure got extended, but I need to actually look into Brexit. This is something I don't know too much about. But for example, right, the trimmed mean CPI, that's not going to have much of an impact on, the AUD pairs, in my opinion. CPI isn't something, we might see, a little bit of movement, but it's nothing in comparison to, for example, next week we have the cash rate coming out for AUD. This is a lot more, significant news-wise. The cash rate is the interest rate for, the Aussies, right? So this is something that means a lot more and holds a lot more significance in comparison to CPI. Not that CPI isn't important, but you know, it is nonetheless more significant when we're talking about interest rates. Every different news event has a certain relation to the impact when we're talking about the economy and how significant of an impact each of these has. Sure, they're all high impact news events, but some are going to be even more significant and stick out to me more than others. Last time CAD interest rate didn't move anything. Yeah, I don't remember the last time we had the CAD overnight rate come out. Sometimes we won't, like when we have a crazy week of news like this, we might see a lot of movement in one day on a variety of different currency pairs, despite the fact that we have, non-farm, which is usually pretty significant on Friday. I wouldn't expect non-farm to do that much this week because of the fact that we have the federal funds rate, which is right here on Wednesday. Wednesday, I'm anticipating a far bigger move than Friday. Usually check the dates and go back that day in TradingView. Yeah, for sure. And then you can kind of gauge what happens based off of those news releases. That's a good idea. That's a great idea for backtesting. News events are something that I don't like to trade live, but I will, look for institutional setups prior to the news events taking place, and then really getting that pump in whatever desired direction the institutions are, anticipating, or not anticipating, but looking to guide these markets. For example, if we were to look at, I am going to look at USD CAD in a second here, but if we go to AUD USD, this was a trade that we took a couple of weeks ago. We had AUD news, the AUD is equivalent to non-farm payroll, right? The unemployment rate and such. That came out on, I can't remember exactly when. If we were to go ahead and hit play, this is our entry point. We were able to get that sniper entry right on the wicks of this candle right here. And the news event happened, I believe, right around here. In this 4-hour candle, we had that news release, which really just drove price up even higher, right, to break above these equal highs that we were looking at as targets, right? We were targeting above these equal highs. All this is just liquidity, a bunch of stop losses piling up here, right? Let's take a look in chat. So NZD and interest rate, new are the ones who push more. Yeah, exactly, with OX and cut stop losses. Absolutely, they're good for order. Yeah, absolutely. Interest rate ones are the ones that I like to focus on the most of everything. Interest rates really do have a big, they provide a lot of insight into the current state of economies. And the thing that I think is really funny, it's not funny because it's bad, but the thing that I like to note is the fact that the US dollar or the US economy, the federal funds rate is looking to be cut in comparison to what it is right now. So we have a 2% interest rate in the US. That's looking to be cut, which is really bad news. That's not good news at all. I laugh because it's kind of ironic with, the current state of the economy. Everybody thinks that we're chilling. But this really goes to show that we're in trouble here in the States. I'm Canadian, obviously, so I can't say here in the States, but you guys know what I mean, right? Which, if you guys aren't hopping on the financial crisis calls that we do on Tuesday and Thursday, I would highly recommend hopping on those. We do those Tuesday and Thursday. Those are separate from Toshi, but you guys are more than welcome to jump on those calls as well. I'm going to be talking with Cottrell about that to see if we're able to, because John does those calls. He's the expert. One of my good friends, John. But I'm going to see if we're able to put him on for some Toshi webinars in the future moving forward. I'm going to go ahead and take a quick peek at UCAD real quick, and then I think we're going to wrap things up for tonight. If you guys have any more questions, feel free to drop them in the chat. USD CAD, again, weekly time frame, we've seen this retracement. I'm expecting this to continue lower. Daily time frame, we had that break of structure, right? We've created this lower low, lower high. I'm anticipating this to come down and create a lower low. I know some people were looking to buy here on USD CAD, and you might be able to buy this up for a bit of a retracement on like the 4-hour time frame. We do have this imbalance up here. This is what was eyeing or that what I was eyeing earlier for USD CAD was this imbalance. We might be able to see some sort of a retracement up here before really continuing down to take out these, whoops, these lows right in here. That might be something that we could see happening, but you know, again, I would rather trade with the trend, the longer term trend, than against it shorter term. You could obviously, you know, buy to sell. But again, you know, if you are going to be taking any trades with USD CAD and if they're going to be buys, because I'm pretty sure DXY has some room to go up. Yeah, we've already kind of started to see this retracement on DXY. Right, we might see a retracement up to like this point, which would mean that USD CAD would in theory go up some more. You know, obviously trade with proper risk. Maybe trade with a little bit of a smaller position than you normally would, since you are trading against the bigger time frame trend. Financial crisis call is going to be recorded. Yep, they will be. Yeah, Tuesday and Thursday, 8 p.m. Eastern. That's when we do those calls. But they are all recorded. We had a crazy one last week. We had a 2-hour call last week. I'm not sure how many of you guys were on that one, but yeah, Marco, question. Let's hear it, bro. Let's hear it. Hopefully, I'll had some breakthroughs tonight with market structure. It's something that takes more than one exposure to really get down. But again, I would encourage you guys to go through different currency pairs and just back test it. Just back test it, right? Use a line chart, go through, see where we've seen these different breaks of structure. Euro AUD in the meantime, for sure. Do you analyze mostly with naked charts? I don't use indicators at all personally. That's just me. You know, I don't like to use indicators. I like to trade price action. I'm a price action maniac, if you will. Euro AUD is upwards trending right now. Weekly and daily time frames are both, you know, seeing this upwards price action. But if we were to look on, the even bigger time frames, we did see this huge sell off. So what we could call this on like the monthly time frame is a counter trend before continuing lower. But yeah, daily time frame is my main focus on this one. We've been creating these, you know, these higher highs and higher lows, right? That was kind of a bad drawing, but you guys can kind of see. Now with that in mind, we do have this retail trend line. And to me, you know, that's not where I'm looking to take entries. That's a target. I wouldn't be surprised if we saw some sort of break of structure here. We just yeeted all the retail stop losses underneath this trend line. 1.63655. Let's take a look at that level. Uh, 1.63655. Yeah, this is, I'm pretty sure that's the institutional candle I was eyeing up for Euro AUD as well. 4-hour time frame, yeah? Yep, perfect. Yeah, I'm looking at the same thing. I want to see, like, this just looks too good for me, in my opinion. Like, I feel like this, here's what's going to happen, right? This is, again, we don't forecast, we play price action, but in Don's perfect world, this is what we would see happen, right? One of two things. We either break below this, get a reaction off of these two candles right here. Those are our institutional candles. The last down candle before that up move, right? Some sort of a reaction down here for buys. Or we come up first, mitigate out of this institutional candle right here, come down, mitigate out of this right here, before then continuing to the upside. Okay? So for me, you know, I have alerts set on either side of this, I'm pretty sure. Euro AUD buys, yeah, that's the one that I have on right now because I can only have 10. Can only have 10 alerts. I might have to upgrade my trading view again. Use some of these profits to upgrade my trading view. But yeah, this is an area of interest to me down here. And then point of interest up here would be this candle that you called out right here, Colin. We're on the same page, brother. We also have imbalance up here too. There's a lot of confirmations for the sell and the buy from either of these places. It's just a matter of which one's going to play out first. Euro NZD sell limit. Yeah, Euro NZD is basically the exact same thing as Euro odd. You take a quick look at UJ. Absolutely. Yeah, Euro NZD is the same exact thing. Literally the exact same thing. I would be looking to see this play out like maybe midweek. I'm leaning more towards the downside first on Euro NZD. Honestly, I feel like we might run to the downside before we come to the upside. But we'll see. You know, again, we'll trade based off of what the price action is going to be showing us. Yeah, I'll go ahead and take a peek at UJ. UJ, I know some people were looking to sell UJ based off of this institutional candle right here. Daily time frame, we're seeing that we're in, you know, this downtrend. I would be careful with this one though. If we continue going up, this is a break of structure on the daily, which would be a weekly counter trend probably. Yeah. We've come down, we've created this lower low, we might come up. If we do break structure here, which we technically are on the weekly. But if we flip and really do go bearish here on the daily time frame, that'll negate the weekly time frame most likely. I would be careful with UJ sells. I know some people were selling this earlier this morning. Just be conscientious, especially considering DXY has some room to go to the upside. Right? We just broke structure on DXY, where we had this, you know, this trend line that was just destroyed. You know, ideally, I would want to see price retrace up into this area before continuing down. Not touching it might sell because of imbalance. Yeah, for sure. I'm going to take a peek back at UJ again here. Imbalance. Are you looking on the... Oh, I see you. Yeah. Definitely. This is probably even more easy to see on the 8-hour time frame. I don't really use the 8-hour that much, but yeah, this is like right in line with the institutional candle. You could probably find imbalance in this one. Just be careful. I mean, if we take the fib from the high to the low here, we're beyond that 886 point, and I wouldn't be surprised if we just trashed this high. Right? You know, if we're gonna see a reaction, it would be considering the Tokyo session's open right now, we might see something between the Tokyo and London overlap for this if we were going to sell off. Again, I'm not personally in any sells on UJ just because of my bias with DXY, the dollar index. Can you show how you set alerts? Absolutely. Yep. So if we were to look at Euro AUD, for example, Euro AUD, you know, these are our points of interest. We've identified this on the 4-hour time frame. Right? We have these equal lows, which to me, again, this is just a target for smart money to go ahead and drive price down, take out a bunch of stop losses, right? We also have these equal highs up here, which are appealing. So we have money on either side here. The only reason I'm leaning to the downside first with the Euro pairs is because we're so close to this area. This would probably happen over London, I would imagine. If we're going to see anything, it would probably happen over London. But, you know, if we wanted to set an alert, right, you can just go ahead and right-click the screen. You're going to go Add Alert. And if you have the free version of TradingView, you can only set one alert. If you have the paid version, which I would highly recommend you guys go ahead and grab. If you guys are going to take trading seriously, you know, I think it's like $200 for 2 years. Which, you know, you can definitely make your money's worth with that. That's an investment into yourself and your trading, right? But you can say, you know, maybe breaking lows, right? You can go create, and then it's going to show up right where that little orange, I already have an alert there, so it's already there. But, you know, this is what it's going to look like on your chart. You'll see a dashed orange line, and this is what's going to notify you on your phone and/or via the email. Right, you can get it to play a sound, so you can send email to SMS, but I think you have to do something extra for this one. So I usually just go notify on app, show pop up, and play the sound. Yeah. We've been trying to figure out how we're gonna do things with the recordings. So I do apologize. I've had a few different people that are asking me for the recordings, and I just haven't gotten around to it yet. I'm gonna see if I can get those done by the end of this week, all of the ones that I have like 15 different recordings on my computer that I gotta upload. Been going hard with these sessions, you guys. I'm glad that you guys get some value though. I'm glad that you guys are having some breakthroughs, man. But yeah, cool. And I'll send you the the recording, just reach out to me on you'll set up. Yeah, dude. Honestly, nah, it's good though. It's good. I got my OBS recording right now, so this is like recording my entire screen, everything. So, yeah, I'm gonna get on that for this week. Trust. I've had too many requests. I gotta I gotta step my game up when it comes to editing or recording. Might have to like hire on someone to do editing. A little something light. But yeah, cool. I'm gonna go ahead and wrap up the call right now, you guys. It's 8:20. Hopefully y'all got some value tonight with market structure. We'll be back tomorrow at 1:30 p.m. So definitely make sure to stay tuned for that. With that being said, guys, hopefully you have an amazing rest of your night. Trade safe out there, and we'll clap easy. All right, take care.